From our Stars and Dogs segment, it's time for this week's Dog.
That would be HEXO Corp, symbol HEXO on the TSX. Currently trades around $5.65. Its market cap $1.37 billion. The stock is down 13.8% on the week and just under 40% in the last 3 months. In fact, around 45% since it peaked in late April of this year. What does the company do? HEXO is one of the largest licensed cannabis companies in Canada. The company operates with a $2.4 million square foot facility in Ontario and Quebec. What is driving the stock? Well, let's first look at the financials of the business. Q3 results, revenue increased tremendously to $15.93 million from $1.2 million in Q3. And this was Q3 2018, which would be prior to legalization. So you can see why the growth came in there. It was now legal to sell in an adult use market. That's where much of the growth comes from. Q3 accounting net loss, however, was $7.75 million, so it's still losing considerable amount of money. Sales of adult use cannabis in the quarter were actually down slightly from Q2 at $14.6 million in Q3 versus $14.79 million in Q3. This may have tempered the optimism, the slight downturn in Q2 from Q3 in the business, given the fact that with businesses with high growth multiples, generally the market likes to see solid quarter-to-quarter growth momentum, and when that stops, or maybe takes a pause in this case, the market gets a little worried. HEXO reported in the quarter that it remains on track, management said, to ramping up to $400 million in net revenues in fiscal 2020 and to double net revenues in Q4 fiscal 2019. These numbers definitely sound great, but with a general lack of cash flow in the segment at present, the market is taking a wait-and-see approach and pricing in some execution risk at the moment. HEXO has a strong balance sheet with $173 million in cash and limited debt to help execute on its growth plans. Now, cannabis stocks have been selling off generally of late, powered by some sector-specific regulatory and profitability concerns in the near term. There's also a market risk-off trade, which is coinciding with general market weakness. So it's not surprising to see HEXO hit our radar as our dog of the week. But it's a stock we continue to monitor, has a good balance sheet and great growth potential and forecasts going forward. But we do monitor the sector to see if there is some significant profitability in some of these businesses on a go-forward basis.